All right, guys, the PayPal stock. It is down to pre-pandemic levels. I'm talking it is literally lower today than it was right before the COVID crash. So in today's video, I'm going to break down the full year 2021's earnings. I'm also going to give you my intrinsic value per share, what I think it is worth today, and levels that you should be looking to buy, and also profit targets of where the stock could go when it decides to rebound and head back up towards the upside. So let's jump right in. What's up, guys? Welcome back to This Just In. Thank you so much for joining me today. My name is Justin, and I am your host. In today's video, we're going to take a look at the PayPal stock. This is one that I've owned for a long time. I dollar cost average into it. Everybody knows who PayPal is. Massive company. I'm planning on doing a weighted dollar cost average strategy when it decides it wants to bottom out and start to create that momentum shifting structure. So in today's video, I'm going to break down the full year 2021 earnings report. We're also going to look at the guidance. Then I'm going to give you my discounted free cash flow sheet on the intrinsic value per share of what I think it's worth today. Then I'll also break down the chart because I've had a lot of people asking me, where should I buy? Should I wait? Where's it going to go from here? And so I'll break down the chart and give you my thoughts on the levels that you should be looking to buy, and also profit targets for when it turns around and heads back up towards the upside, so you know exactly what I'm doing. If that's something you want to see, stick around till the end so you don't miss that. Before we jump in, guys, subscribe to the channel if you get any value out of this video and you want to see more like it. Like the video so it gets out there to more people, and come join us at the Patreon if you want to be part of an amazing family and get all of our trade setups. Day One Squad, I love you guys so much. Thank you for your support. It really does mean so much to me. You have no idea. But let's get started, guys. I'm going to try to make this video a little bit short, just kind of go over the basics here. So this is just kind of the key highlights from the full year 2021 earnings. You can see they actually put on less new net active accounts than they did last year. They actually put 33% less accounts on, but they still put on 48.9 million, which is, still an insane amount of accounts. Obviously, 2020, COVID year, everybody's home. Tech companies aren't going to be able to maintain that explosive, insane growth like they did during that year. But nonetheless, they still did 1.25 trillion in revenue, which is payment volume, not revenue, payment volume. Sorry. That's 31% increase year over year in total payment volume. They did 1.25 trillion. They finally broke a trillion. That's pretty insane, guys. This is what is really impressive, guys. They are growing a $20 billion a year company at 17% a year. That's insane. They did 25.4 billion in 2021 and just 21.5 billion in 2020. They are guiding to keep that up. That's what's even crazier, guys. That's a huge revenue growth for such a large company. The non-GAAP EPS, they actually did about 20% better than they did last year, 1% less on the actual GAAP EPS. But this right here, again, guys, is what I like to see. They grew 9% on their free cash flow year over year. That's beautiful. When it comes to traditional valuation metrics like price to earnings, they might look a little overvalued. I think their price to earnings is maybe 30, 25. I can't remember exactly. I don't typically use a PE ratio, but it is a little bit high for some people's taste. I like to keep them around, 15, 20, but this is such a fast growing company. I think it deserves a little bit of a higher PE. The price to free cash flow was 20, or it was yesterday at least, which is right in the wheelhouse. That's exactly where I want it. And I actually think PayPal could deserve even a little bit more than, a 20 on the price to free cash flow. So very impressive metrics here, guys. If we take a look at the next slide, this is just some of their guidance for next year. Real quick before I go over that, they've also got insiders buying shares. Guys, insiders sell shares all the time for random reasons, but when insiders buy shares, it's because they're bullish on it, right? When you see, big money or big insiders buying shares, it's because they think the stock is undervalued. I would like to think so as well. seeing how it is down lower than it was right before it crashed during the vid. So next thing, guys, that I want to point out. The total payment volume is expected to grow 19 to 20% again next year. That's pretty insane, guys. And that's at the current spot rate, and 21 to 23% if you use the FX neutral basis, which is just a calculation for all of the currencies because they are global. They use different currencies. The revenue is expected to grow 15 to 17% on a spot basis, excluding the eBay revenue, expecting to grow 19 to 21%. You'll see just here in a minute on the discounted free cash flow sheet, we are using pretty significantly lower revenue growth than that. So very impressive again, guys. Now, I don't know how many more years they can maintain that type of growth. I don't think it could be much more, right? Maybe 3, 4, 5, maybe. I feel like it would have to top out at some point. But a lot of people have the argument that they haven't even tapped into the crypto, scene as much as they could. And so that could be another huge source of revenue. They could also continue to make acquisitions and things like that. So, they very well could, but we'll just have to wait and see. 15 to 20 net new active accounts expected to be added to PayPal's platform in full year 2022. The reason why it dumped so bad when these earnings came out, guys, is because that stuff right there. The huge decrease in new, net new active accounts. If you remember, they put on 48 million in 2021. They're only projecting or guiding to do 15 to 20 million in 2022. I don't think that's that big of an issue, guys. I don't care what the net new accounts are, as long as the total payment volume is going up. I don't see an issue if it's less people sending more money through or more people sending less money through. It doesn't really matter to me. So nothing to worry about there, in my opinion. If we jump over to the discounted free cash flow sheet, guys, you can see here, I used a pretty conservative revenue growth for the next 5 years. I put about 12%, which maybe isn't conservative. Maybe that's about right on. I also used a terminal growth rate of 5% every year after that in perpetuity. So 12% revenue growth from today for the next 5 years. They're projected to do anywhere on a conservative end, 17% in full year 2022. And I want to say that they're pretty much expecting to average, from what I've seen, analysts are expecting around 14%, moving forward. The net margin, that's for another section. We don't worry about that. Cash flow margin, I put 20%. Because they currently today in their trailing 12 months are doing 21%. And I wanted to show you a couple different options. So with those numbers, if they grew at 12% revenue and maintain that 21% free cash flow margin, the intrinsic value per share would be right around $114. So dead on pretty much where it is today. If we pulled that free cash, if we pulled the revenue growth up to 15% though, it would jump our share price to $130. If we jumped it up to the 19%, $151. So, I think that where it's at right now is a pretty fair value. I mean, if you think PayPal is going to continue to grow at a pretty similar rate over the next couple of years with even a slight decrease at around 12%, I think the $114 is a very fair price. I also think that the free cash flow margin might be a little bit high at 20%. So let's drop that down to like 15%. You would see there it drops the price clear down to $85.77. So we're just going to kind of have to take a look at the chart and kind of see where it could potentially go. I think right around $100 is a fair value for PayPal. And I actually think that $114 is a very fair value, to be honest. Because if you plan on holding it for the long term, I think you will absolutely see PayPal stock rebound and go back up towards the all-time high within the next 5 years. Now, in the short term, I do think it could go lower. So just kind of throwing that out there. If we jump over to take a look at the chart, guys, you can see here, nasty drawdown, big bearish harmonic right there at the top, one high, second high, and then a third lower high. Before it dumped. And it's been pretty disgusting. I mean, it's down like 60% over the last 12 months. If we really want to measure it since it topped out, It's down 63% in 200 days. So not even a, not even a full year, about 2/3 of a year. So, and one thing I want to point out, guys, is we had the initial high back here in July 2019, the next high right before the COVID crash, and it dumped. And look where we're at right now. This is kind of a tricky spot, guys, because I think that the next level is $100. So I think I can't confidently say that you should be buying it at this area right here, because there's just not really an area for it to find support except for $100. There might be some minor levels in there, especially like right there at 104. But what you want to see, guys, is you want to start to see that momentum shift. And ideally, what I would like to see, we'd want to get that like momentum shifting structure where we get like a spring and then a back test of spring, and then maybe it rallies a little bit to make a little bit of a higher high or the same high, and it back tests it again, whatever, and then it goes. We got to get some type of like momentum shift, even if we got like that inverse head and shoulder type stuff where it did something like, like this or, whatever. Just something to imply that the bottom is in, it is, the momentum is starting to shift. Buyers are starting to step in because price is getting pushed too low. I don't think you really want anything to do with it if you are buying it for the short term under $120, because the next level that you're probably going to see is that $99, $100 level. And it could even go back to like $89, or lower. So we just got to kind of wait and see. I'm dollar cost averaging into it, guys, so I have no problem just buying it every single week, especially at these prices. But my plan is to start really weighted dollar cost average, where I add significantly more once we get that momentum shift and we start to get that, structure, the back test of the level, and then it's off. You can see here it filled a major gap. So all we would need is a spring, a back test of spring, and we could be headed to way higher prices. Once you get back above that 124, guys, I mean, literally 184 is like the next major level, anywhere between like, I think 177, 184. So you get back above 124, you got a lot of upside. Now, if we take a look at the oscillators, guys, you can see, I mean, it is, just made some of the lowest levels of negative momentum since clear back here in August. There's no divergence on the MACD, but there is on the RSI. You can see you've got bullish divergence in development. It's not confirmed yet. And you just made some of the lowest levels of relative strength again since, early December. So, these are definitely lower risk levels, right? You are oversold technically on the RSI, but you could absolutely go lower. And until you get that like clear bullish divergence and it starts to bottom, I don't think you should buy it at a short-term mindset. If you're buying it for the long term, though, obviously, and you believe in the company, then be my guest. I'm currently buying it every week. So the oscillators aren't looking that great, guys. It is implying further downside. I honestly think that you could see, that $100 level. If we jump over to the weekly time scale, you can see just absolutely disgusting, just big bearish engulfing candles. You just broke the 200-day moving average. That's not good. That's not good. One thing I think you do have going for you is on the daily, how extended you're getting from the 200-day moving average. They usually revert back to the mean, so, you could catch a little bit of a reaction here. But, again, if we take our fibs from the COVID crash to the high, we're right at that 886. So, I mean, $108, $100 right in there. That's the areas where you could see a major reversal happen. I think the only time that we're going to be in trouble is if we break that 886 and get down to that 100% retrace and then break the 100% retrace. Because then it's like bear market, like extended, ridiculous, drawdown, whole market, goes with it. So it's getting down to those super low risk levels that I think is setting you up for a really nice long trade if you plan on holding it for a, couple of years. So once we start to get that structure is when I'll jump on, make another video saying, hey, this could be also a really good short-term swing trade, as well. Notice on the weekly MACD, still just building fresh negative momentum, guys. I mean, you got to start waning, you got to start, getting ready to flip positive. You're so deep in oversold on the weekly, deepest levels of oversold relative strength that you have seen ever in history by a large margin. And I bet the monthly's pretty similar. Yep, almost, yep, exactly the same. Look how much further you could go on the monthly. I mean, you're right there in the bearish control zone on the monthly. Now, this is a very slow time scale, but you could absolutely see, 30 on the RSI on the monthly, and that could take you to much lower prices. So just wanted to throw that out there, guys. I think, again, just to be clear, PayPal's a great stock, great company. I own it. I will add more once it bottoms out, creates a momentum shifting structure. I think $110, $100 is a great price for the stock. I think $184 is a price that we will see like that as soon as it gets over 124. And I think you will absolutely see 310 again in the next 2 years. And I think PayPal could be a $400 stock in the next 5 years if it continues to grow at the rate it's growing at. So let me know what you think down in the comments, guys. I would love to hear from you. If you agree with my price prediction, let me know. If you agree with my analysis, let me know. Come join us at the Patreon if you want to be part of an amazing family, and I'll see you guys in the next one. Peace.